Just check the link now. Hmm, perfect. All right, so finally we are here and we are starting off. Guys, a little wait, but we'll make it worth it. So we're starting off right now. Good evening and Jan 25 students. A lot of people are counting down, but I'm not. I'm here to reduce your stress in two, three ways here. First, we look at the DT amendments. Yes, a lot of chatter is about what has changed, what has changed. Guys, not much has changed. Don't worry. Let me tell you from the start, there's not too much of change. And whatever little changes happen, I'll show you right now. I'll explain to you, I'll make you understand it, I'll make you by heart it also. All good. Second, we look at top 50 sections or top sections that you should look for your exams. And third, we'll end the session on a very nice note. We'll predict the exam so that the next month, whenever the exam happens, you know what's going to be coming in the exam. So let's start right now, right away, inaugurating this DT amendment session with this page here. I will be sharing all the pages that you're seeing here, guys. This is the DT amendment, and what I've done is just so that it's very, very easy for all of you, I made it chapter wise. The same way that we have solved it in exam, sorry, solved it in class, the same way those chapters are flowing here. Let me introduce you. These are the DT amendments for Jan 25 exams. That means your exam. Now, here I've written by till when the amendments are applicable. All that is not important for you. An important note is there. But in case you want to know, before your Jan exam, 6 months before your Jan exams, they cut off. That's the cutoff date. After that date, whatever changes happen are not reflected in your exam. And the Finance Act applicable to you all is still 2023, which we discussed in class as well. Or if you've not been my student and just watching the amendment lectures, then don't worry, Finance Act 2023, wherever you studied, seen it from, those are the same changes that are here. Some may be new, some may be covered. Watch it because they're all really important. So let's start the first chapter, introduction. Not much has changed. Actually, nothing has changed here. Only thing you should keep in mind is that your previous year still is previous year 23-24. That means in your exam, and your assessment year is same 24-25. That means most of your exam sums will be on this year and this assessment year, which basically technically mean the same. So we move to the next chapter in no time. House property. You have a house, you are earning some income, the government says I want tax on it. So what has changed in that head of income? Let's see. There was a property called self-occupied property. Not in the old scheme, but in the new scheme, which is now called the default tax scheme, that SOP interest is not allowed as a deduction, which for a student is great news because now you don't have to do any calculation of 2,30,000, nothing. If there is SOP interest, you have to take that as zero. Now, how will this come in the exam? In the exam, if they say Mr. A is opting for the default tax regime under section 115 BAC and it happens to have an SOP, then all the numbers in that SOP will be zero. So that is something that is very easy now. Second thing, if you had a loss from house property earlier, remember guys, scratch your head, remember there was a chapter called set off. In that, if you had a loss from house property, first you would set it off within the family, and then if not, you would go outside. You could go to salaries, you could go to PGBP, but now again in the default tax regime only, this loss from house property cannot go outside. That means it cannot be set off against any other heads of income. In our language, which you and me understand the shortcut language, it has now become from friendly and shy, it has now become non-friendly. That is income from house property. Keep these in mind, and these both changes are only in the default tax regime. Maybe we already know this, but this is important and this is amended. So hence I want to talk about it. We move to chapter number 3 already. Yes, not too many changes, guys, and whatever there is, I will discuss it in detail. In chapter number 3, a very happy chapter because it's called exempt incomes, means those incomes that are not subject to any tax in India. Example, agriculture, which was our favorite. Here, there was a discussion around life insurance policies. but that same discussion is discussed below because it's also part of another chapter. So we'll talk about it in some time. Next, in exempt incomes, we also took a deduction. Yes, there was a deduction of 10AA awesome area, whereby, just briefly talking about it, if you go to a SEZ and if you start exporting from there, then the government gives you a benefit for 5 years plus 5 years plus 5 years, that is total of 15 years. Now, two things you have to keep in mind, that this SEZ business benefit, you can, the last year for taking this benefit was previous year 2021. That means if you set up a business in the year 2021, you could take this for the next 15 years. So, sir, can I go to the SEZ today and start taking these benefits? No. Then why are we doing this discussion is because if someone set it up in the year 2021, they're 15 years and the reduction is still going on. Just keep that in mind first. Second, in this 10A deduction, what we have to calculate is the SEZ's profit and exports. If you remember the shortcut, we take the SEZ, we take the profit of the SEZ and multiply with the exports. We call it SEZP in our shortcut language. Now, in that profit example, the profit is 20 lakh and the export is 80%. So this happens to be, you will get a deduction of 16 lakh in the first 5 years. Now here there's a small change. They say that what is exports? Exports are those, only those where you get the money back, the forex, the very valuable forex. You have to get it back into India by 30th September. So your year starts on 1st April, it ends on 31st March. After that, whatever you brought into India by 30th September, only that will be considered for exports. Let's take an example. So out of 80 crore of export sales that you made, only 50 crore of forex you got back into India by 30th September. So basically the exemption calculation will be only on 50 crores, not on 80 crores. That's something that you should keep in mind. The forex has to be received back. The date is 30th September. Not 30th September during the year, 30th September after the year. Alright, so that is two changes in exempt income. We move to chapter number 4, rates of taxes. A chapter that is there in the first sum only. They will ask you to calculate rates of taxes. In rates of tax, something very important is your, maybe you know it, maybe you don't. In any case, if you know it, you'll revise it. If you don't know it, you'll learn it from scratch with me. There is a person, let's call him Mr. A, who does not have too much incomes. Every year he is saying, I don't have income, I don't have any tax to pay. But in his wedding, he spends 10 crore rupees. The government says, how did you get the money? This is an unexplained expense. Same person, in his bank locker, he had gold worth 5 crore rupees. The government says that is an unreported or unexplained asset. If you have any of these which is undisclosed or unreported or unexplained, basically that means you've tried to hide it from the government. And whether it's an expense or an income or an asset or an investment, the government is super upset now. How dare you hide it from the government? So they have a section called 115 BBE, in which that they will levy a flat rate of 60% tax. No slabs, no 0, 5, 20, nothing. Straight 60% tax. On that, there will be a surcharge of 25%. Doesn't matter how much income, still there will be surcharge. And a 4% HEC is what you'll have to pay because you hid this income. And these rates are under section 115 BBE. So let's take an example. You had 1 crore worth of income or expense which you did not explain. So on that, you have to pay 60% tax, basic tax, plus 25% surcharge, plus 4% HEC, which roughly works out to be 78%, which is a mind-blowing 78 lakhs you'll have to pay to the government because they caught you hiding your income. But guys, don't worry, this can be explained also. So if you explain with a good reason how you got this money or that asset or investment, then they may not tax you. This is something that you should know. Now let's try and apply this from an exam paper to also see how they ask us in the exam. This is the May 24 paper, and in the May 24 paper there was question number 1, and in that question number 1 there was a small line here. Let's read this line, zooming in. A sum of 4,000 per month was paid as salary to a staff throughout the year, and this has not been recorded in the books of accounts. Guys, this is an unrecorded, undisclosed expense. The government is upset that why are you not showing this expense? So 4,000 per month, that is basically 48,000. First, you will have to calculate 60% tax on that. Then on whatever that amount is, you will have to calculate 25% surcharge, and you add both these amounts and you have to calculate 4% cess, and this is what you'll have to add to your tax liability at the end because this is under section 115 BBE. Now, this is assuming you could not explain it, but if you can explain it, you can avoid this tax. In the exam, if they give you this, rather than explaining it because there is no explanation, you'd rather calculate this tax and whatever tax liabilities to that, you will add this income. This is the rates of tax, and this is the concept of 115BB, which is kind of important. So pay that kind of attention to rates of tax. Congratulations, we now move to question number 5, which is great, which is IFOS, income from other sources. Your dividend income, your interest income, your other income, casual income, all of that comes under IFOS. Let's see what is the change here. The first change, as you know, pension is taxable. PT, we already had a shortcut in class. If you didn't know it, now you know that pension is taxable. And if your family after you are no more, your family gets pension, even that family pension is taxable, first thing. So if you spot it in the exam, please put it under IFOS. And then the government gives you a deduction. The deduction is either one third of the amount or 15,000 per annum. This was a different number earlier or a different per month. Now it's 15,000 per annum. Let's take an example. Let's say you got family pension of 3 lakh rupees in the whole year. So it will be 3 lakh divided by 3, that is 1 lakh, this one third of the amount, or 15,000, whichever is lower. So 1 lakh or 15,000 is lower. So you will get a deduction of only 15,000. This one is a change. Please make note of it. If this comes in the exam, you should be able to answer this like this. Next, dividends. Dividends are free money. You sit at home, a company declares dividend from shares, and you get that dividend. Is it taxable? Definitely yes. Under IFOS, we know this. There's nothing new here. But what is new is that depends upon the dividend. If the dividend is given in the annual general meeting, that means it's a final dividend. Then whenever it is declared, the year of declaration will be considered as a year of income. Example, let's say the annual general meeting happens on the 4th of April and they declare a dividend of 10 rupees per share, then this will be taxed in this year only in the year of declaration. But on the other hand, if the exam says that it's an interim dividend, which by the way can be cancelled also. So the government says it may be cancelled, it may not be cancelled. So we'll wait for the year of receipt. So let's say such interim dividend is declared today, 5th December, but it is paid to you on 4th April. The government says whenever you receive it, that year will be the year of taxable. Shortcut for this, IR, interim dividend whenever received, or FD, final dividend whenever declared, or both, depending on how good your memory is. You can use this shortcut to remember this concept of interim dividend and final dividend. Next, very, 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 very important. If there is one thing in today's session which is the most important, I think it is this. The next concept is super important. But before you go to the next concept, let me talk about life insurance and the receipts. Guys, there was life insurance, we've already discussed. Let's say you took a life insurance policy of 20 lakh rupees. And this was taken recently, that is after 1st April 2012. And the premium you were paying was, let's keep it a smaller number, easier number, 10 lakh rupees. And the premium you were paying is 80,000 rupees every year. If something happens to you, your family will get this 10 lakh rupees, and the government says that in case this money is received on death, it is fully exempt, no questions asked. Second, if all the premiums you pay are low, that's a shortcut for you and me. What is low premium? Low premium basically means up to 10% right now. Before 1/4/2012, this percentage was 20%. So this policy is taken, let's say, in 2018. So the percentage is 10% of 10 lakh, which is 1 lakh. Your premiums are below that, so it's low. Since all the premiums are low, this amount will also be exempt. But in case the premiums are high, then the same would have been taxable. This is something that you already know. Now I'm adding something over and above. Policies taken before 1/4/2003, the same trend will continue. But in case you take a policy on or after 1st April 2023, then there is one more condition added for high premium. Let me talk about the policies now. Policies taken on or after 1st April 2023, again, the same concept is still continuing. If it's on death of a person, it is fully exempt. Second, if the premiums are low, that means up to 10%, and the premiums are up to 5 lakh rupees in a year. Example, in my policy, the premium is 80,000. So not just low, but it has to be up to 5 lakhs. Only then it is exempt. So example, let's say you took a policy of 60 lakh rupees. 10% of that is 6 lakh rupees, and you paid 6 lakh as premium. So are you meeting the low category? Yes, but you're not meeting the 5 lakh category, and hence whenever you receive this money back, other than that, of course, then it will be taxable. So simply saying, it should, there are two conditions now. It should be low also, and the premium should be up to 5 lakh. So if now what has become taxable? So either high premium, or if it's more than 5 lakh premium, then it will be taxable. But remember, this is only and only for policies issued after 1/4/2023. That means if your policy is going on from before that, don't worry, no change. Only for new policy, they brought in this change. So I'm just reading. Section 1010D is the exemption. In case of policies issued on or after 1st April 2023, before that there has been no change. Only after, on or after that, death exemption still continues. If the premium up to 10% and the total premium is up to 5 lakh, only then it will be exempt. Otherwise, it will be taxable. So now for exemption, you need to fulfill two conditions. Let's see. Let's take an example and let's see if you're understanding this. And remember, all the premiums, of course, are with GST. So you have to exclude the GST amount and then compare the 10%. Let's see the example. A policy issued in 2013 will not be bothered by this. So all you have to check is low premium. 60 lakh sum assured. 10% is basically 6 lakh. You are paying 6 lakh annual premium. Is it low? Yes. So when you get the money, it will be fully exempt. This has no amendment because this policy is taken long back. This has no impact. The amendment has no impact on this. The next policy, 1st April 2023, drums rolling in the background. This is the policy where amendment might apply. The policy is for 50 lakh. 10% of that should be 5 lakh, and you have paid up to 5 lakh. Is it low? Yes. And is it up to 5 lakh? So guys, good news, even this amount will be exempt. But sir, how are you getting 52 lakh? Guys, sometimes that money is invested and the life insurance company gives you a certain bonus because you stayed put with that policy for so many years. Next, again, there's a policy which is impacted by this amendment because the policy is on 1st April 2023. Policy is for 60 lakh. 10% is 6 lakh. So are you meeting the low category? Yes. But the premium is more than 5 lakh, unfortunately. So out of the two exemption categories or conditions, you are meeting only one. The other one, which is it should be up to 5 lakh, is not being met. So when you receive this amount, unfortunately, it will be fully taxable under IFOS. Let's go to the next one. And now let's talk about two policies together. Just 1 minute. I'm just checking if everything is okay on the chat here. Perfect. Everything is good. So getting back, please make an amendment video for GST. Yes, for GST also we'll be making one tomorrow, same time, 5 o'clock. We're having a same GST amendment video also. All right. Can I get amendment PDF? Yes, you can definitely get amendment PDF. I will attach the link here only. Yes. Also, and so for disabled person, yes, disabled person also the same concept applies. Any policy taken after 1st April 2023, same question applies. Only thing, the percentage changes there. For us, it was earlier 20, which became 10. For disabled person, 20 has become 50. All right, guys, let's talk about two policies now, both issued on or after 1st April 2023. Will it be subject to the amendment? Yes. Now, both of them, guys, the both conditions have to be applicable. The premium should be low and the aggregate premium should not be more than 5 lakh. Let's see. Is this premium low? 10%? Yes. Is this premium low? 10%? Yes. And if you add the premiums, it is 5 lakhs. So all conditions met. Congratulations. Happy music in the background because the receipts will be completely exempt. But let's see this next one. Again, policy taken on or after 1st April 2023. 45 lakh, is this 10%? Yes. 55 lakh, is this 10%? Yes. But both together, it's going on to 10 lakh premium, which is unacceptable. The government says, I can't give you exemption. You are a rich person paying so much premium. Then you can take exemption, but only for one policy. So this or this, obviously you cannot take for this one because it's exceeding 5 lakh. So you can take only for this. So whenever Policy A pays you back. Of course, other than that, there is no taxability, guys. Only A will be exempt here, guys. Only receipts from policy A will be exempt. We go to the next one. Let's see if the next one you're able to understand. Now, not one, not two, but three policies are in picture. Let's see how this is tackled. All after 1st April 2023. So all subject to the amendment. Yes, here we go. Is it 10%? Yes. Is it 10%? Yes. Is it 10%? Yes. So they're all fulfilling the low criteria. But what about the 5 lakh criteria? If I add all three of them, 6 plus 3.5 is 9.5, and one is 10.5 lakh. Unfortunately, it is very, very high premium. The government says I can't give you exemption for all three. This obviously I can't give you exemption anyways because it's individually also more than 5 lakh. But this and this, 1 plus 3.5 lakh, which totals up to 4.5 lakh. Can you take a benefit of this? Yes. So whenever you receive money from insurance policy A and B, it will be exempt. But C, unfortunately, will be taxable. Receipts from A and B will be exempt, but receipts from C will be taxable. Oh my God, 4 policies now. They keep increasing it, but don't worry. As long as your concept is clear, you'll be all good, guys. This is before 1/4/2022. So this policy is at ES. Amendments will not apply to this policy. Just check. Is it 55 lakh and is it 10%? Yes. So no problem here. This is definitely exempt because none of the amendment will apply to this one. So it's safe. Pretty nice. It's like someone who took the policy earlier now will not be bothered. But all these three policies are new. So what to do with these three policies? This is 10%. This is also 10%. This is also 10%. But this is clearly taxable because it is more than 5 lakh. So while this is exempt, I'm writing it here. This one is exempt. This one is clearly taxable. Now, what about these two? Can we take the exemption? Yes. So X, A, and B, all three will be exempt. But C, unfortunately, is crying in the corner. C for crying because that is taxable. Receipts from X will be exempt. We already know that. Receipts from A and B would also be exempt, but only C will be taxable. Now again, guys, back with 4 policies, and this time all of them new. 23, 24, 24, 24. Let's check first. 10%, 10%, 10%, 10%. But this one, unfortunately, is taxable because it is more than 5 lakhs. Yes. Faizan, thank you so much. You're the best. Yes, thank you. And guys, whatever your comments are, keep putting them. I'm loving the comments. We'll talk about it. Any questions you have, anything at all, including that, listen, I don't feel like giving the exam also. I'm here. I'll help you how to break it down. Don't worry. Yes. Now, guys, I'm putting it ahead. X, A, B, C. There are 4 policies. We will take it again. 10%, yes. 10%, yes. 10%, yes. And 10%, yes. So that means all the premiums are low. But this one is more than 5 lakh. So this one is definitely taxable. I'm writing a T here because, guys, there are 2 conditions, 10% also and 5 lakhs, which 5 lakh criteria this is breaking. So it's taxable. What about the remaining? Can I take for all? Unfortunately, no, because 2.5 plus 2 is 4.5 plus 2.5 is basically 7, and I can't take 7 benefit because they say even aggregate should be up to 5. Then how do you choose? Don't worry, guys. You can choose to the best of your knowledge. If I take this policy and this policy as exempt, 2.5 and 2.5, I'm just changing the color so that you get an idea. If I take this policy and this policy exempt, then when I get the money back, I will get 30 lakh exempted and 38 lakh exempted, which is great. But on the other hand, I'm changing this color. If I take this one and this one exempted, then I will only get 30 and 24 exemption. So you have to choose well. And guys, you don't worry about the choice. You already know the choice. I'll give you an example. You are going to Zara and there are 3 items, A, B, and C. Payment to MSME will also be covered here. Don't worry, guys. All amendments will be covered right in this one video. Don't worry at all. You're going to Zara. There are 3 products, A, B, and C. Zara says you have to pay only for one of them. This is 1000 rupees. This is 1000 rupees, and this is 300. You can buy 3 products and only pay for one. Which one will you pay for? You will pay for C. How did you make the choice? Just so that you best in your interest, whatever is, that's the choice. Same way here also. The best choice is to take X and B. Let's check for X. Is it 2.5 lakhs plus 2.5 lakhs? So is the premium up to 5 lakh? Yes. And these both will be exempt. So X will be exempt, B will be exempt, and then A unfortunately will be taxable. I'm writing taxable here, exempt here, and exempt here. Perfect. All right, now moving ahead, going to five policies. Oh my God, this is crazy. But don't worry, as long as you know the concept well, two conditions, it'll be all good. Let's first filter out the 5 lakh criteria and the 10% criteria. All policies are new, so all policies will be hit by that 10% and 5 lakh rule. Is this 10%? Yes. Is this 10%? Yes. Is this 10%? Yes. Yes and yes. But this one is 6 lakh. Unfortunately, this one will definitely be taxable because it's going way above 5 lakh, that is 6 lakh. So the others, you can take exemption, but not all of them because 2 plus 2 plus 2 is 6 plus 3 is 9. The government says 9 is too much. You can't. It's like a voucher where you can only order food up to lakh voucher. So then what do? I can take 2 plus 2 also, but that will give me a benefit only of 40 lakh. I can give this 2 and 2 also, but again that will give me a benefit of 40 lakh. But if I take this 2 and this 5, then I will get a benefit of 50 lakh. So now guys, I've not given the answer here, but you tell me guys in the chat box, which of these ones should I take as exempt ones? Of course, it cannot be C. C is already taxable. In X, Y, A and B, which of them should I take as exempt? I'll help you guys. X and B, because totally the premium is 5 lakh, and when you get 50 lakh, that one would be exempt. Perfect, perfect, perfect. All right, Coffee with Saurabh sir, definitely virtually and on YouTube. And if you clear Coffee with me, definitely in real, sponsored by me. We move ahead, guys. Now, this is a concept which is very important. I have a feeling this will come in your exam because ICI spent a lot of time on these illustrations. So I think this will come in your exam. So make sure you're doing this well. Mehak, Manasvi, good answers. X and B are the perfect answers. The others also, guys. Mufida, good answer. Vamshi, A and B, no. X and B. A and B also actually could be the answer. Guys, 1 minute, 1 minute. A and B also could be the right answer. And so and Y and B. Anything with B is a good combination because you get a better benefit. Perfect. All right. It's time to progress, promote ourselves now to PGBP, which is chapter number 6. In PGBP, just want to refresh your memory. There is a section which says 44AB. Are you aiming to be a big person in life? Then be prepared to go for audit. You will at the end of the year have to go to a CA who will audit you. And what is big person? In a profession, if your turnover is more than 50 lakh or 70 lakhs, and in business, if your turnover is more than 1 crore or 10 crore. I'm just reminding you that this 75 lakh and 10 crore limit will only apply to you if your cash transactions are low, cash receipts also low, and cash payment also low up to 5%. Guys, some of these amendments you might know, but refresh them. Some will be very new, so learn them with me. Next, I don't want to go for audit. I don't want to do all the calculations. So the government says, welcome to the world of presumptive tax. They are allowing me presumptive taxation, and they say you can assume your tax to be or profit to be 6 and 8%, which is 44 AD. Here again, 44 AD and 44 ADA. I missed writing that. For 44 ADA profession and 44 AD is business. In business, sorry, there's a mistake here. I'll correct it and upload it. In business, your turnover for presumptive taxation has to be up to 2 crores or 3 crores. That means if I'm a very big businessman, can I take presumptive taxation? No. Your turnover has to be up to 2 or 3 crores. And same for profession, up to 50 lakhs or 75 lakhs. But the higher limit, again, is any higher limit, a small pro tip I'm giving you. Any higher limit will be applicable only if your cash transactions are low. So understand the cash transactions have to be low so that you get a higher cash limit. And the highlight, people get very worried about this section, but don't worry, I'm here to help you out with a section called MSME. Let's see guys what this is. But first, a small recap. There is a section called 43B. What does this section say in PGBP? Let me tell you a little about that. The government said, listen, you're businessmen. All of you guys are following accrual system of accounting. You pay tomorrow also, I give you a deduction today. You pay day after tomorrow, I also give you a deduction today. But there are some expenses, and the shortcut for that was M3. These expenses, the government made a condition that listen, I'll give you the deduction, but you first pay. You pay, send me a screenshot, like how you take screenshots. Say, take a screenshot, of course, that's a joke. You have to understand that. And the government will give you a deduction only when you pay, but not today, not tomorrow. You can pay by June. That means your July, October, December, sorry, July, October, November due date. So let's take an example. I'm supposed to pay interest to SBI Bank and my interest is 10 lakh rupees. If I don't pay this 10 lakh, the government will not give me a deduction. So only when I pay, can pay today also, tomorrow also, or I can pay even before filing my return in July, October, or November. Now in this, we already had studied MSME. So let's talk a little about MSME. Now what is MSME? Guys, MSME means micro, next small and medium enterprises. What does this mean? They are smaller enterprises, guys. They don't have too much of money. In terms of turnover, micro is the smallest, where plant and machinery invested in the smallest. You don't have to see all the numbers. In the exam, they will tell you either micro or small or medium enterprise, doesn't matter. All three of them, guys, same concept applies. So we are talking now about MSME. Guys, they are very happy with this, and hence the section is 43BH. Remember this because this can come in the exam, and this has already come in the exam. I'll show you how. Now, when you are going to pay to an MSME, they said that we will give you a deduction, but only when you pay. Example, let's say a micro enterprise came up to me and said that, listen, we will do some service for you. I said, okay, do it. And they have said, we will charge you 5 lakh rupees. The government says, I'll give you a deduction of 5 lakh, but only if you pay. This is to an MSME. But here, they're not given us a due date till June. In MSME, they said you have to pay within 45 days from the date of invoice. 45 days you have to pay. Very, very quick. Yes, because they want to make MSMEs happy. And this is if you have an agreement. Example, you and the MSME have an agreement and the agreement says pay in 32 days, then you pay in 32 days. If the agreement says 42, you pay in 42. But if the agreement says 52, then they will say maximum 45 days as per this section. So this section says that in case you have an agreement with the other person, which is an MSME, then maximum 45 days. It can be lower also, but not more than 45, depending on your agreement. But if you and the MSME did not get into any agreement, just an email, etc., then you have 15 days to make the payment, even more fast. That's why, guys, MSMEs are very happy with this under section 43BH. All right. Now let's talk about this. Here we go. Let's take a paper and solve one sum on that MSME part, so you'll have get an idea of what I'm talking about. This is the September paper, and let's talk about this here. Question number 1, 15 marks. At the end of it, they had put two conditions here, guys. Let's see. Mr. Raman, who is the main hero of this story, of this question, guys, he purchased raw material from Messrs. Paul Industries, a micro enterprise. So they will always tell you in the exam that's a micro enterprise, for 49,000 on March 10, 2024. The exam year also was 23-24. So towards the end of the year, March 10, you have purchased something. The payment to Paul Industries was made on April 5 by check. No written agreement for payment existed between Paul and Raman, guys. Let's talk about this. Is there an agreement? No. Paul and Raman trusted each other. No agreement, maybe an SMS, maybe an email, maybe a WhatsApp message. So in this case, you need to make the payment within 15 days. Since the payment is not made within 15 days, sorry, you will not get this deduction. So this one you will not get, and this is additional information. So can I minus this 49,000? No, because that's not made within 15 days. There's another supplier called Carl Industries. Again, he's a small enterprise with whom also no written agreement existed. Basically, here also SMS, WhatsApp, email happened. No agreement happened. And here you paid him 1,34,000 in cash on 5th April 2024 for purchase of raw material on 31st March 2024, which is very interesting, except this word cash you have to keep in mind. Did you purchase raw material? Yes, on 5th April 2024. And sorry, you purchased it on 31st March, last day of the year. You paid it also within 15 days. So ideally you should get a deduction. But guys, knock, 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 and knock again. If you remember cash limit, you cannot pay more than 10,000 per person per day to anyone in cash. And hence this, although you paid on time, this also will not be allowed as a deduction. So I hope you understood. I'm going to change this cash and I'm going to write check. Then will it be allowed as a deduction? Yes, it will be because you paid within 15 days. Sir, why was 45 days not discussed here? Because 45 days only comes up when there is an agreement. Without an agreement, you're stuck at 15 days. So whoever asked for that MSME discussion, YT360, wow, fancy username. YT360. I hope you're not an alien, and I hope you understood this 43BH to the best. In the exam, don't worry about the turnover limits. Remember about that they will say it's a micro, small, and medium enterprise, and remember the due date of 45 and 50 days. Perfect. This is only for micro and small industries. Yes, perfect, perfect, perfect. Basically, they're trying to protect the micro and small industries, not to medium, of course, only to micro and small. Also, it is not applicable to, it is only applicable to manufacturing and service industry. That means if you're purchasing from someone who does not manufacture, does not provide any services, then this concept does not apply. Perfect. We'll take any questions that you have. But let's see some more good news, guys. Chapter number 7, set off and carry forward. If you have a loss, can you set it off? Yes. If you can't set it off, can you carry it forward? Yes. We had an example of a blood bank, friendly, semi-friendly, etc. All of that, guys. No change, absolutely. Life is good when there are no changes here. So this one is really nice because no change. Capital gain also, guys, no change. You have an asset, you are selling. Whenever you're selling, whatever you sell it, that's your sale consideration. You can minus any expenses of brokerage, cost of acquisition, cost of improvement, you can do all of that. And remember here also, guys, indexation is still a part of, very much a part of your portion. So if it's long-term assets other than listed shares, you can index. The indexation CII for your year is 348. What do I mean by this? Obviously, they will give you in the exam, but in case they don't give you, the first year, that is 2001-2, is 100, and this year, your exam year is 348. Guys, if some friend tells you that indexation is not a part of your portion anymore, block that friend. That's wrong information. Your amendment year is 23, Finance Act 2023. Till June of that year, we did not have this indexation concept removed. So it's very much a part of your portion. So in the exam, if you see a long-term capital asset, please do indexation. Uh, from where should be deducted? From PGBP head or other GTI? Where should be deducted? Of course, from PGBP. Guys, this is a business expense. You're paying to a medium and small enterprise, sorry, micro and small enterprise. This is in PGBP, and hence you have to deduct it from PGBP itself. All right. We move ahead to something that is slightly different again. Maybe you have an idea, maybe you don't. Let's discuss it. Guys, here we go. This is salaries. Not one of the favorite chapters either of mine or most students, but in salaries, there is a small change that happened. Now I'll tell you what happened. The government earlier had made a plan that, listen, if your employer, whom we call lovingly as a master and slave, if your master is giving you accommodation, then obviously it's a benefit paid by the master, enjoyed by the slave, and we need to tax it because it's a perquisite. If you remember, SAP and SEP, we are talking about one such perquisite, that is a house or an apartment or a flat or a bungalow, depends on how important you are. Your employer is giving you some accommodation and you're staying in it. We're talking about that. Furniture, no change. Only and only in this case, accommodation, the percentages have changed. Unfortunately, they have changed in the middle of the year. Don't worry, first I'll teach you the percentages and then I'll talk about how do you solve it in the exam. So first we'll talk about the new ones. This change happened on 1st September 2023, right in the middle of the year. Of course, right in the middle is 1st October, but one month before that, they made a change. And they said that now, if the house is given in a city which is very populated like Mumbai or Delhi or Chennai or Calcutta or Bangalore or Hyderabad, where the population is more than 40 lakhs, then you will calculate the accommodation as 10% of your salary. So if my salary is 10 lakh rupees, then 10% of that, that is 1 lakh, will be considered that the perquisite value of accommodation. If it's in a smaller town where 15 to 40 lakhs is the population, then 7.5. And if it's lowest than 5, don't worry, I have a shortcut for you. You start with 10, you make it half, and then you go in the middle. That's how you remember it. So you start with 10, go to 5, and then in the middle is 7.5. Guys, here the population figures have changed and the salary percentages have reduced because overall, guys, salaries have increased. You would have all heard some IIT grad has got salary of crores or rupees. So now, because the salary amounts have increased, the percentage they've reduced so that we are not hurt on the accommodation perquisite. This is thanks to Nirmala Sitharaman, but I'm not a big fan of this change in the middle of the year. Now, what was earlier the percentages? That means if the exam question says that you got an accommodation before this period, then the percentages was like this: 15%, make it half, 7.5%, in the middle, 10%. So the shortcut is still the same. Earlier it was 15%, then half was 7.5, and the middle was 10%. Again of salary, yes, of salary. So those percentages, as you can see, have reduced on 1st September. Now, let's talk about how will you solve this in the exam. Don't worry. If in the exam they give you a question on accommodation, then you will calculate. First, you will break this into two parts. First, you will take the salary from 1st April to 31st August. That is April, May, June, July, August, 5 months salary. And you will do this percentage, let's say 15% of salary. I'm assuming you are staying in a very crowded place like Hyderabad or Mumbai or Bangalore or Chennai or Delhi. And from 1st September to 31st March, that is September, October, November, December, Jan, Feb, March, 7 months you will calculate, and you will do 10% of that, and you will add both of them, and that will be your perquisite value. So can you please repeat the applicability? Instead of repeating, Ishita, just watch the video. This is a video which will also be there later on. You can just watch it to the middle part, and then you'll get it again. And I'll tell you if you have doubts how to reach out to me. All right. Perfect. So this is what now, guys, just reminding you the definition of salary is not, guys, BDC. If you've been my student, basic salary, dearness, commission, no, it's not that. The definition of salary is slightly different. You take salary, that is S. You take allowances, that is A, and perquisites. You will take everything. In salary, you don't take POW. If you remember the shortcut, guys, you don't take any PF contribution. You don't take any arrears or advance rent, and you don't take OD. In allowances, you'll take only the taxable allowances. So the big allowance minus the exemption is called the taxable allowance. And perquisites you don't take because what you're calculating is perquisite only. Let's see a sum, guys, on this, and let's see how this is answered. So again, going back to a sum, this is your September paper again, and let's talk about it from the September paper. Yes, we are solving a sum only on rent-free accommodation. We've also solved for the rent-free accommodation sum in the books from an RTP. You can check that as well, but I'm solving a sum here also. Let's solve a sum on rent-free accommodation from this. Let's start. Everyone, you'll need a calculator. Even I'll need a calculator. I'll just hunt for my calculator. Just give me a minute. Okay, I can't search for a calculator. So you guys will have to calculate and tell me the amounts. Even I'll try and calculate it. Here we go. I think I've already done this sum, so I'll just show you this. So there is this person, particulars given, are of Mr. Radhe, whose income, age 47 years, is posted in a private company in Delhi for the previous year 23-24. Now, his basic pay is 35,000 till January. So April to January, it's 35,000. And so that is 35,000 into 10 months, that is 3,50,000 is his basic pay. Plus 40,000 from February and March, so 2 months, that is 80,000. This totals up to his basic pay, which is 4,30,000. Dearness allowance is 30% of his basic pay. So whatever is basic pay, 30% of that will be dearness allowance. Let's calculate that. So 4,30,000 into 30% is 1,29,000, guys. 1,29,000 is his dearness allowance. All this will be taxed. Only 54% of the DA is forming part of retirement benefits. So let's calculate D and OD and keep it ready. Guys, 54% is D. So 1,29,000 into 54%, that is 69,660 is D, and the balance is OD, which I'm not even considering because that I don't have to include. So that I'm not considering, that is OD. So I know what is D, what is OD, but anyways, all these three numbers will be taxable. Yes. Now, leave encashment, basically that means some amount was not taken on as leave. If you don't take leaves and you go to office every day, guys, they pay you money. So that is also taxable, that is 10,000. And if you're not understanding this, guys, repeat the shortcut that I gave you, that any amount going from the master to the slave is taxable. So this one is taxable. He received salary for the month of April 2024, that is next year's salary in advance. So 40,000 is advance salary. And remember, this arrears and advance we will not take. So I'm just writing what all you will not take, guys. OD you will not take. This 40,000, if you remember, power you will not take. Take in what? In accommodation calculation. Also, you received an area salary for the month of last year's March. That basically is 35,000. Both these areas in advance you will not take in the calculation of accommodation. I'm just writing it here. This also you will not take. Next, his employer gave him a rent-free accommodation which is fully furnished in Delhi from 1st April 2019. This house is owned by the employer. During the previous year 1920, that means a couple of years back, the perquisite value of such rent-free furnished accommodation was 39,000. So they've given you, why have they given you this? I'll tell you in some time. But they've given you the value 2-3 years back. What is the value of this perquisite? The employer also provided him with the facility of a gardener to maintain his house. The salary of the gardener is 1,000 per month. As a gardener who is being paid by the master, but it's benefited to you. So it's a perquisite. This I'm writing here. This will also be taxable, 12,000. But I will not include it because it's a perquisite. So this 12,000 I will not include as part of my accommodation perquisite, because perquisites you don't take in the accommodation calculation. The furniture and appliances provided to the house were bought by the employer at an aggregate cost of 1,50,000. If you remember, again, furniture is a perquisite. You will take 10% of this for the whole year. That is 10% of 1,50,000 is 15,000 is the furniture perquisite. Again, it's a perquisite. So in my calculation, this 15,000 I will not take. I'm writing all this so that when we do accommodation perquisite calculation, we can avoid all these perquisites. Electricity and water bill, your master is paying, which is great, but again, it's a perquisite. 4,000 into 12 is 48,000. And since it's again a perquisite, this will also not be included in my calculation of accommodation perquisite. Moving ahead. Is it necessary to watch the retirement benefit video? Not at all. Especially if you're underprepared for other chapters, you can leave it. Guys, this is it. The employer also spent 50,000 on a refresher course for upgrading Mr. Radhe's skills. Guys, you are getting upgraded. Master is paying. No problem, guys. This is not a perquisite. We've discussed this already in class. During the previous year, his wife had been admitted, full ambulance sound in the background, in a notified hospital, and the treatment of her kidney disease, guys. All sad, sad, sad news. The hospital bills amounting to 3,50,000 why paid by the employer. Such a good employer. Hope everyone gets an employer like this. And this one could have been a perquisite, guys. But because if you remember, guys, GMC hospital, is it government owned? No. Is it master owned? No. But is it notified by the commissioner? Yes. So this one will also not be included in perquisite calculation. Perfect. And will not be added also. So this is where we end, and we now calculate all these will be taxed under salaries, except we don't have one number, which is accommodation perquisite. Now, can we calculate accommodation perquisite? I don't have a calculator, so I'm going to take the numbers from here. But you have to split the numbers because the change happened on 1st September. So for April, May, June, July, August. For 5 months, what is the salary, guys? 35,000 into 5, that was the salary. So I'm just going to do the calculation. 35,000 into 5, that is 1,75,000. Will I take that? Yes. 30% of that, 1,75,000 is my dearness allowance, and 54% of that, that is 28,350, is the D which I will take. OD I will not take. You already know that. I'm doing this only and only for 5 months at a time. Next, this is done, this is done, this is done. Leave encashment for the year is 10,000 rupees. Will you take that? Yes, you will take everything that is money. Will you take advance? No. 40,000? No. I'll not take 35,000. I'll not take 12. I'm just reading it here from here only. I will not take 15. I will not take 40. So basically, this is what you will take. And on this, 1,75,000 plus 28,350, you will do, because it's the Delhi, because it's the city of Delhi, which is population of high population. Earlier, you would do 15%, guys. So 1,75,000 plus 28,350. This into 15% is 30,502. This is the perquisite value of accommodation for the first 5 months. Same thing you will do for the next 7 months. Example, how will you calculate that? I'll guide you. For the next 7 months, again, you will take basic pay, where it will be few months 35,000, few months 40,000. You'll get the basic pay. You will do 30% of that into 54% of that. You'll get D. You will add this 10,000 leave encashment in the second part. and then you will not add the others, and you will do a 10% of that because the percentage changes for the next 7 months, and you will add up both the perquisites and you will get the value. Now, guys, this question is for 6 marks. In question number 3A, is this a choice? Yes, first it's a choice. If you're not very strong with accommodation, I would not even take up this choice. And even if I had to, and if I don't do accommodation, I'll maximum lose a mark, which is not a big deal. So don't worry, try your best. There's a change from 1st of September. Remember the change, do the calculations well, and you will get the marks and the answer as well. Yes. All right. So this was a big change. I'm just reading it out. And now, guys, I'm telling you something that is surprising. They said while you do all of this, if your perquisite value of few years back, let's see the perquisite value of few years back, guys. If the perquisite value few years back is 39,000 in the year 1920, then the government says you can take this value, but it should not exceed this 39,000 adjusted for inflation. So now, guys, hear me out well. This is an amendment and hear me well. This whatever value we are getting, let's call it A, and let's say 30,502 plus some amount will be here, which is A. The government said take B also. B will be this 39,000, which was the perquisite value in the year 1920, and you have to adjust it for inflation. So 1920 is 289, and this year is 348. So you have to adjust it for inflation, and maximum it can be that much only. So I'm going to take 39,000 and I'm going to go do this maths. 39,000 divided by 289 into 348, which is 46,961 or 962. This, it cannot, your accommodation perquisite cannot exceed this value. That's the idea. That's what they're trying to say. This is something that is new. I hope you've understood this. And of course, this is complicated. So don't go into too much detail. I'll just summarize this for you. If this comes in the exam, first solve the entire sum. Keep your perquisite calculation mentally slide on the side. Any provident fund contribution, any areas advance, or any OD, also keep it on the side and total it up, and then calculate first basis on the previous percentages, that is 15, 10 and 7.5, and then new percentages are 10, 5 and 7.5. Yes. Is it confusing? Yes. Is it difficult? Yes. But is it a part of our portion? Yes. So instead of doing retirement benefits, I'd rather do this amendment because this is slightly more important. Retirement benefit is rare in the exam, and even if it comes, it's a optional question. So I don't think you should spend too much time doing retirement benefits. All right. That is a big, big, big amendment, guys. I'm going to go to the next one. We don't have too many amendments now, just a small list here. Some of them you already know. So let's go to the next one, guys. Here we go. I'm going to the next amendment. If you remember, there are three accounts that can be opened for your benefit. One of them is Provident Fund account. One of them is National Pension Scheme account, and one of them is called Superannuation Fund account. Guys, this all three accounts are generally not opened in one person. It's like Airtel, Jio, and Vodafone. Would you have all the three SIMs? No, you don't. So you might have one, but let's say you have all these three accounts opened and your employer is contributing in all these three accounts. He puts 2 lakh rupees here, puts 2 lakh rupees here, and 2 lakh rupees here. These amounts basically are exempted, as you know, because the government uses this money before you get it. But the government is now become a little strict about it or a little stingy about it. They are saying that 6 lakh, no problem. But if this becomes 3 lakh, example, master has contributed 3 lakh, which totals up to be 9 lakh, then they said that it's okay, a master can contribute 9 lakh, but the exemption we will give you is only maximum of 7.5 lakh. The remaining will be taxable under salaries. So how will this come in the exam? They will say that your salary is 1 crore rupees. This is your salary. And your master is contributing 12% because up to 12% is exempt. So he's contributing 12% to a PF account, which basically works out to be 12 lakh rupees, which earlier used to be exempt. If you remember our discussion of SPF, RPF, etc., I'm talking about RPF. Salary is 1 crore. Contribution by the master is 12%, which is 12 lakh. Earlier used to be exempt, but now out of 12 lakh, only 7.5 lakh will be exempt, and the remaining 4,50,000 will become taxable. This is something you have to keep in mind, everyone. So I'm just reading it from our sheet here. Contribution to employees NPS, Provident Fund and Superannuation Fund will be exempt, but only up to 7.5 lakhs rupees per year. So what they've done is they're still giving you the benefit, but they've limited the benefit to 7.5 lakhs. Don't worry, again, if it exceeds, then only give benefit up to 7.5 lakh. If it's lower than that, then there's no problem at all. Can I share the PDF amendment? Definitely, I'll share it. I'll share one, two other things also. Let me show it to you. Next, guys, in all these three accounts, you will earn interest. Example, in PF account, your interest is exempt up to 9.5% if you remember. In NPS account also your interest is exempted, and so is superannuation fund. But the government again has made a rule now. They said, let's say interest here is 50,000, here is also 50,000, and here is also 50,000. 1.5 lakh, no problem, it will be exempted. But if it goes more than 1.5 lakh, example, I 60, 60, 60, then that 1.8 lakh we cannot exempt. We can only exempt maximum 1.5 lakh. So contribution wise 7.5 lakh, and earning interest wise 2.5 lakh. My bad, 2.5 lakh is exempt. Yes, I'll change it here, guys. This is 2.5 lakh, and there was another change which was required here, which I will make. This is 75 lakhs. So in the exam, how will you identify? If they say PF interest at 9.5% is some 2,75,000, then out of that 2,50,000 will be exempt and 25,000 will be taxable. Perfect. 54% forms part of retirement benefits, then we should take 46%, which does not form part. No, we in fact 54% forms part of retirement benefits. That means that is D. Vamshi, that is the one that we have to take. Other DNS allowance we don't have to take. All right, everyone, we go to the next amendment now, guys. Very simple, you already know it. I just want to address this section 80D. You're buying a medical insurance policy. You're paying premium, and if you remember, section 80D gives you a deduction of that medical insurance premium. You can not just pay premium for yourself, spouse, and children, but also for your parents, if you remember. Here, a small change, note it down well. If your parents don't have medical insurance and they are senior citizens and you pay for their medical treatment, can you also take a deduction? Yes. We've already written this. This part you already know. What you don't know is this next part. Even for yourself, if you don't have medical insurance and if you're a senior citizen, then even for yourself, you get deduction for medical treatment. For that, not just for parents, but also for you. But again, within the overall limit of 25,000 or 50,000. Since you're a senior citizen, it will be 50,000. That means even after medical treatment, the deduction cannot be more than 50,000. All right. Sir, I'm looking at more questions. If income is mentioned along with the word computed, it would mean that the respective tax deductions are already included. But if it doesn't say computed, we have to do the standard deduction, right? Absolutely right. Jayvil, I'm very surprised with this question at this point on time on the 5th of December, because we had done this computed thing so many times in class. I'm a little surprised and not very happy to see this question, but I hope you got the answer. All right. Next, guys, there was a section called 80EEA, Easy EMI again. If you recollect, if you take a housing loan and you're paying interest, then besides house property, you also get a deduction here. But the house should be bought between 2019 and 2022. And we had joked about it that before this, there was a section called 80EE. Let's talk a little bit about that. But because what if that comes in the exam? I have a rare chance of it coming in the exam because this is the same interest on housing loan. You've taken a house on loan, you're paying interest. Will you get a deduction? Yes. But here it is only up to 50,000, and these are only for houses bought in the year 1617. Remember here, the year is different. 1617 you should have bought the house, and the deduction here, the limit is only up to 50,000. Perfect. Next, if you remember 80 CCD, Cafe Coffee Day, what happened there? They introduced a new scheme called NPS scheme, National Pension Scheme. And if you contribute to the National Pension Scheme, the government gives you a deduction under 80 CCD 1 also, and excess under 80 CCD 1B also. Let's take an example. I have an NPS account. I put 32,000 there. Can I take a deduction? Yes. Now, in the exam, if rarely they will ask you this, but in the exam, if they say tier 2 NPS, then guys, you won't get a deduction. Just keeping in mind, how do you remember this? Second tier we don't take, we only take first tier deduction. What is the difference between tier 1 and tier 2? Not required right now. In the exam, if they write tier 2, don't take the deduction under 80 CCD. All right. Tier 2 is like a cheap first copy. You don't take first copy, you only take the original. That is tier 1. All right, we go to the next chapter. There are only two chapters now. The next one, and it's not very difficult, the next two amendments. First, section 194A, guys, recollecting and taking a break for a minute and then restarting again. Till then, guys, if you have any questions, you can share. Otherwise, guys, how is the preparation going? If I have to give you one tip for preparation right now in the month of December, the only tip is that whatever you know, focus on that more. Instead of learning something new, your friend is saying, "Oh, have you heard of that?" No. What you know, repeat it, repeat it, repeat it, and don't learn anything new in December. Give your exam in Jan confidently. Remember, this is not a race to get 95. This is a race to get 50. You reach halfway, you'll clear your exams. So with that intention, whatever you know will come in the exam. If something extra comes which you're not prepared for 1 2 marks, let it go, don't stress over. Yes, compensatory in nature, and without compensatory, definitely we'll talk about it as well. All right, let's start, guys. There's a section called 194A. If you remember, Axis Bank. When someone pays you interest, example, this is a bank which is paying you interest. It could be a partnership firm paying you interest. It could be a friend paying you interest. Then section 194A says that they need to deduct TDS at the rate of 10%. For banks, the TDS will only be there if they pay you interest of more than 40,000 or 50,000, something that we had already discussed. I'm not getting into those details. But now I'm going to a small scheme which the government has introduced. Very, very simple, don't worry. Mahila Samman Saving Certificate. What is this? For women, of course, the name only suggests, and for their respect, they can open a small deposit account for 2 years. The maximum amount you can put is 2 lakh. So 2 lakh at the rate of 7.5%. Even if you calculate the rate of interest, guys, it will not go above that per year. So if I take 2 lakh and I multiply into 7.5%, so I'll do the mathematics here. It's 15,000. It does not go exceed the limit of 40 and 50,000, and hence the government says this section will not apply to Mahila Samman Saving Certificate. That's all. So important, not at all, just a part of the amendment list that ICI shared. So I'm sharing this news with you. So if there is Mahila Samman, then in that case, even if they have a Mahila Samman certificate, there will be no TDS because it does not exceed 40,000. Going to the next one, guys. Section 194BA. On your phone, I hopefully there is no app like Dream 11. But in case you have an app like that, then how will it be taxed? What is the TDS? How does it work? That is what we're talking about. Just 1 second. Yes, so we're talking about on 194BA. That is a betting app. Just giving you a recollection of that. You had Dream 11. You put 10,000 rupees. You made 1 lakh rupees. Hopefully, fingers crossed. And then we're withdrawing the money on the net amount, that is 90,000. They will deduct TDS. This was basically a section called 194BA. TDS rate was 30%. If you don't withdraw, then at the end of the year, they would deduct the TDS, even if you don't withdraw the money. Now, what happened is a lot of people, including some students, I don't want to name you, but maybe you are one of them, and people invest very small amount, 10 rupees, 20 rupees, and they play with that. Then the government said that if your net winnings does not cross 100 rupees, then on the withdrawal, we'll not deduct TDS. So example, you put 10 rupees, you made 40 rupees, and you're withdrawing now that 30 rupees, then in that case, that withdrawal, there will be no TDS because up to 100, there will be no TDS. But the next time you put in 100 and you are withdrawing 1000, then it's exceeding 100 rupees. So then on the net amount, they will have TDS at the rate of 30%. Let's take an example, guys. Let's do two transactions. The first transaction, you put in 10 rupees and you got 40 rupees. So what is the net amount? 30, which you are withdrawing. The government says no TDS on this 30 because it is less than 100. The second time you played, you put in 100 rupees and you made 1000 rupees and you're withdrawing now 900. Is this more than 100 rupees? Yes. So there will be TDS, but not just on 900. On 900 plus that 30 rupees of earlier, there will be TDS on this 930 rupees at 30%. So remember, up to 100 rupees, they will keep adding it, but they will not withdraw the TDS. Let's take another example. You put 10, you got 40. Net winnings 30, no TDS. Again, you put 10, you got 50. On this 40, no TDS. So 70, there's no TDS. Now you put 100, you got 1000. Your net withdrawal is 900 plus 70, that is on 970, there will be TDS at the rate of 30%. This is what section 194BA, small amendment, small change. And now, guys, the big one, which I feel is very important from the exam perspective, is this next one. So you like going for abroad trips? Yes. You want to send money abroad through a scheme called LRS. RBI allows you under liberalized remittance scheme to send money abroad. And I have a shortcut called MELT. You are sending money for medical purposes. You are sending it for your education. You are sending it just like that under LRS, or you're sending it for a tour program, or you're engaging in a foreign tour program. In these four cases, the government said you are becoming a global player now. That's why the section is 206C1G. That is something you already know. I'll tell you when the new thing starts. Now, the government realized that on this, the TDS rates or TCS, my bad, there is tax collected at source. There will be this TCS rate. If for any of these purposes, you are taking out money more than 7 lakh rupees in the whole year aggregate, then there will be TCS at the rate of 5%. Hear me out well. So first, you took 3 lakh rupees, no TCS. Then you took 4 lakh, no TCS. But the next time you take out, because it exceeds 7 lakh, on the excess, there will be 5% TCS, only on the excess above 7 lakhs. This is for normal cases. If it's for medical purposes and education purposes, the government has a very soft heart for this. The government says we don't want to block someone's money. So again, more than 7 lakh, but they've reduced it to 0.5%. That means for medical purposes, if I send 4 lakh, no TCS, sorry. 3 lakh again in the same year, no TCS. But after that, above 7 lakh, there will be TCS only at 0.5%. But for tour, the government says, listen, yeah, incredible India. You want to see mountains, you want to see snow, why Switzerland? Go to Kashmir. You want to see beaches, don't go to Miami, don't go to Bangkok, go to Goa. So in that case, for tour programs, they have made a small change. They said that we will have no limit, 5% TCS. That means whatever you are paying to the tour programmer, there will be 5%. And if you happen to take more than 7 lakh, then on that excess, there will be 20%. This is the highest one because it's foreign tours. They've taken highest rates here. So I'll give you an example. For a Dubai tour, you're paying a tour program 3 lakh rupees. Guys, on that, it will be 5%. Yes, 5% extra you'll have to pay as TCS. What if it's not 3 lakh? What if it's 13 lakh rupees? Then it will be split. Up to 7 lakh, it will be 5%. And above 7 lakh, it will be 20%. So this is how they are taking both these rates without any limit. Now, how do you remember this? Pretty simple. Normal rate is something that you have to buy hard, more than 7 lakh on the excess at 5%. Medical education is sentimental, so 0.5%. And tour, they have no sentiments. They're upset actually you're going abroad, and hence 5 and 20% up to 7 lakh and above 7 lakh. Yes, this you have to see aggregate. That means in the whole year, all the amounts have to be added up and then the calculation has to be done. This is after 1st October, up to 7 lakhs, then 5%, and above 7 lakhs, then 20%. As before 1st October, it was a flat rate of 5%. So let's address this. If in the exam they say up to 1st October, then the before rates applies. That changes only for tour programs, guys. Other things have not changed. If it's up to 1st October, example, your Dubai trip was in the month of July, then on the entire amount, whatever is the amount, there will be 5% TCS. Life was good. But after 1st October, on or after 1st October, 5% will apply. This is up to 7 lakhs. And above 7 lakhs, there will be 20%. So you have to be careful of when the tour is happening. Only for tour, this date will apply and this change has applicable. Sanvi, this is a very weird question. Since our classes were conducted in Feb, will the amendments applicable for September? See, doesn't matter when your classes happened, doesn't matter what happened. You have an updated book. That book, along with this amendment, will cover it all. Don't worry about anything else. In fact, I've not just taken this recent amendments, I've already taken all the amendments that are applicable to you. So whatever is your book, handwritten notes plus this amendment will cover you up. All right. So Andarya, thank you so much. My pleasure. Sanvi, I hope this question is answered. Let me know if there's any doubt around this. But remember, your book is covered well. Plus, all these amendments will cover you completely for your exam. All right. And guys, while you travel abroad, can you use your credit card abroad? Yes, no TCS on that credit card. And 7 lakh threshold is combined for all the purposes. Perfect. And we come to the last one, which is return of income. Nothing major, guys. Two things which I have already spoken about. Let me speak about them once more. Tax return preparers. I want to file my return, but unfortunately, my return, I don't want to go to CA, they're expensive. So, can I go to a TRP? Yes, you all know about TRPs. I've also given you a handwritten note. But what is the qualification for a TRP? A TRP has to be a graduate and he has to be, or he has to be a CA, CS, or CMA inter-level cleared. So, if you're CA, CS, CMA inter-level or a graduate, then you can become a tax return preparer. That's one small thing that I added here. And there is something called updated return. I'll talk a little about this because this might be important. Updated return, guys. Previous year is a very happy year where you earn all your incomes. Your previous year will start from 1st April, end on 31st March. After that, after all that happiness comes the assessment year where you have to file your return by either July or October or November, and our friend there is John. In a chapter called Return of Income, we saw that if you miss these due dates, example, my due date to file my return of income was July, and for some reason I forgot it. Should not be done. But if I forget it, the government says, don't worry. If you forget, you can file a belated return under section called 139(4) up to 31st December. So not till November, but even more, you can file your return up to 31st December, no problem at all. So this is called late return. Of course, there are some repercussions, but can I still file my late return? Yes, but 31st December. What if I remember some mistake next year? What if I remember some mistake next to next year? Earlier, guys, there was no provision to change your income tax return after that. But now the government has said that even after the assessment year is over, you can still update your return for up to 24 months, that is 2 years. Hear me out well. Your previous year is 23-24. Your assessment year is 24-25. So after that, in the next year, that is 25-26, and also after that, that is 26-27, that is 12 months here and 12 months here, you can still update your return, guys. So your year got over, assessment year also got over, still you have a chance of updating your return for the next 24 months. But the government made a very smart move. They said when you update the return, you can only update the return for adding any incomes. If you want to reduce your incomes, you cannot update your return. You want to file the updated return, you can do so only if it is in the benefit of the government. Then why, sir, will any person be stupid enough to file an updated return? If he's forgotten some income, why will he show it now? Because guys, if you don't show it and the government catches you, then you'll have to pay penalty, interest, everything. So the government has said that you can file a updated return. First, you should understand, can you file an updated return? Yes, the section is 139(8)(a). Next, till when can you file updated return? You can file it up to 24 months. That's the second thing that you should understand. Now, the third thing you should know about updated return is that it should be in a way that it increases your income, increases your tax liability, but you cannot file it if it reduces your income, or if it reduces your tax liability, or if it increases your losses. The government says, sorry, this updated return is only and only for our benefit, not you. So if you want to come out clean, if you want to do some confession, this is the great place. You can update your return. And last thing, if you update your return in the first 12 months that is applicable, you'll have to pay the excess tax with 25% extra. We all know 25% extra, and a Colgate toothpaste tube, 25% extra. Same way here also, in the first 12 months, if you update it, you have to pay 25% extra. And the next 12 months, that is from 12 months to 24 months, if you update it, you have to pay 50% extra tax. So if my tax on the new income is 1 lakh, I'll have to pay 1 lakh 25 in the first 12 months. And if I do it in the next 12 months, I'll have to pay 1 lakh 50,000 as tax. All right. Amendments related to income from business connection in India. There's no amendment. In fact, the only thing that has changed is that India exports news, movies, and diamonds. That has been removed. So there is no change, Nazia. That thing has now been removed. India exports news, movies, and diamonds, which is a good thing. So congratulations, you don't have to buy hard that. So any income which you have from a business connection in India, that will be taxable. All right, my page is hanging up. We've almost finished everything. So I'm just going to just show you that amendment side here again once. Guys, this is the amendment. I will attach the PDF. But after correcting this, I just need to correct one thing here. This is not in PGBP. I want to make small correction. This is not 3 lakhs. This is 75 lakhs. And there was a small correction ahead also. Let me just see what the correction was here. Yes, this was 2.5 lakhs. So basically, this is the amendment list. Guys, your book along with my handwritten notes, actually just my handwritten notes along with these amendments will see you through. Don't worry about anything else. These are all your DT amendments. Tomorrow we'll also have a session for GST amendments. But before I close, I want to show you something very interesting here, guys. Here, we did a fast track course recently, and I want to show you something from that. This is CA Enter. This is a fast track course. We have Jan exam prediction list for DT. This very exciting page is a prediction list. So, first question, second question, fourth question, and some 2 extra questions. What will they be? PGBP rates of tax reductions, TDS, TCS advanced tax, return of income, residential status, and set off and carry forward. This is prediction. That means this has to be done really, really, really well, these chapters. And I also have an ABC analysis. This is not just an ABC, but this is the sequence which you will study 1.5 days before the exam. You will start with this chapter, then you will go to this chapter, then you will go to this chapter. In this sequence, if you study, you will not just finish your portion, but you will also do the first main chapters first. I'll share this also sheet with you guys. Then there are top 50 DT sections which are here. From a Jan exam perspective, these are the top 50 DT sections. If you have this already, great. Otherwise, I'm happy to share this as well. So I'll make a folder with this as well. These are 26 sections here. And on the next page are the remaining. And these top 50 sections, if of DT, if you remember, you'll be good to go in the exam. This is what it is. These are top 50 sections of DT. Yes. So I can share both of these with you. I can share the prediction list. This is the exam strategy also. Yes. Okay, 1 minute. I'll just check that. 43BH. 1 minute. Yes. Thank you. Ishita, thank you for that. This is 43BH. And this is an exam strategy of how you will attempt the paper, starting with GST and then going to DT. So guys, these I will do. Now, a very, very, very important announcement. I also put a story around it on WhatsApp, Instagram, and also get a message on Telegram that starting from next Tuesday, which is basically next Tuesday is going to be the 10th, 17th, 24th, and after that also, guys, till your exams for Jan exams, every Tuesday we have a doubt solving session at 5 o'clock in the evening. So it'll be a Zoom session or I'll make a YouTube session. I'll just put up around the story. And if you have any general doubts about some chapter, etc., I'll keep it so that you can also talk about your doubts. So I'll rather keep it on Zoom where we can have two-way communication and we can discuss your doubts on those Tuesday doubt solving sessions starting from the 10th, that is this coming Tuesday. So if you have any doubts, don't worry, I'm with you and I'll solve all your doubts in this month so that next month you can enter your exam confidently. Also, for y'all, I'm releasing a marathon, a DT marathon and a GST marathon, which is very nice and detailed. All you have to do is watch that marathon. For GST, it's about 16 hours, 18 hours. But guys, that covers everything. You don't have to do anything. Just watch that and you will revise everything that you need to revise along with these amendments also. And for DT, there's another fast track. So I'm going to be releasing those both fast track videos. I think tomorrow is planned for one and day after is planned for another one. So that's the plan for DT and GST marathons as well. Um, Anything else also you require from me, I'm happy to help. I will see you guys now. We will do goods and service tax amendments tomorrow, GST amendments tomorrow. But by the way, GST amendments are not much. Very simple amendments. We'll talk about them tomorrow at 5 o'clock. Today there was some goof up at 4 o'clock, 5 o'clock. No, it's going to be at 5 o'clock. So come here and we'll discuss about the GST amendments as well. Same way, I'll show you GST 25 sections, top 25 sections of GST and GST ABC analysis as well. But all that will happen only tomorrow. So see you then and good night. Don't worry. Pray well, study well, and you will see it through. Happy to take you guys tomorrow for GST amendments and on Tuesday for doubt solving sessions. Ending the stream now. Um, Section 115 JC, just cry. Okay, we'll discuss it tomorrow or in the doubt solving session. We can discuss 115 JC. But Swati, not very important. The default tax scheme 115 JC was important earlier, but now there is default and there's a old scheme. So focus on that, and your exam marks will come from those only in first question. 4% HEC is applicable on 2.5 lakhs. So what is all this confusion, Krishna Kanta? HEC of 4% is always payable whenever you pay tax. Anyways, I'll see you guys tomorrow now for GST amendments. And let's not make this a doubt solving session. On Tuesday onwards, we'll have doubt solving sessions dedicated. You can come with your doubts there on Zoom, just like this. Ask me a doubt on voice and I can reply back as well. Yes. Ending it now. Thank you so much. Do well with you. All the best.